Ferrari now accepts Bitcoin. Apple pulled Metamask off the App Store. Australia are now making tight squeezes on the crypto regulations, and so much more crazy crypto news that has happened over the last week. It's something you don't want to miss. So welcome back again. I'm Theo, a content creator for the Alt Crypto Talk team. In this video, we'll go through all the latest and trending crypto news that you need to know about and keep yourself updated with. Remember, nothing in this video is financial advice, purely my own opinion and based on my own research. Do not invest in anything you can't afford to lose. And don't forget to smash that like and subscribe button, leave a comment if you have any questions whatsoever. And be sure to follow us on Twitter at AltCryptoGems for daily crypto content. And check out our website for frequent guides, project reviews, articles, and everything crypto related. Okay. Let's jump straight into the video. Okay, ladies and gentlemen, let's start off with the first article, which is about crypto regulation in Australia. And it's not looking good. It's the same as the UK, the US. They're all just getting really tight on their regulations, which in a way, it can be a good thing. I guess we are moving towards global adoption. However, at the same time, DeFi is the best thing about crypto, and these governments are trying to get their grubby hands all over our money. Now, Australian crypto exchanges have largely praised the Treasury's latest proposal to place crypto exchanges under the existing financial services license regime, though some worry it could put the crypto industry into a TradFi-shaped box, which is basically what I was just saying. Australian crypto exchanges have praised plans for the Australian Treasury to regulate cryptocurrency exchanges under pre-existing financial services licensing measures. In an October 16th consultation paper, the Treasury outlined a new suite of proposed regulations that suggested regulating cryptocurrency exchanges under existing financial services rules, as well as introducing a wealth of new guidelines for all Australian firms dealing in digital assets. Speaking at the Australian Financial Review's Crypto Summit event on October 16th, Australian Treasury Stephen Jones said the new regime was focused on three primary areas: providing a framework for industry growth and innovation, allowing regulatory certainty to crypto service providers, and ensuring that everyday consumers and their assets remain protected, which is very good. Now, Caroline Bowler, the CEO of Bitcoin Markets, told Cointelegraph she was pleased to have reached a new key milestone in the regulatory process and regarded the rules as positive progression for the wider crypto industry in Australia. Now, it's a great next step for the Australian economy. Digital assets are so clearly future of financial services, and they said it is imperative the country keeps pace with our international peers with a robust regulatory framework, said Bowler. Now, I do not disagree with that statement. I think that is spot on. The world is moving towards a digital world, so keep up, otherwise you're going to get left behind. Similarly, Adrian Prezonli, if I pronounce that right, the CEO of Independent Reserve, commended the federal government on its recommendations to introduce stronger regulation and policy change, telling Cointelegraph that these new proposals could help restore trust in the crypto sector. We firmly believe these changes will drive investment, provide certainty to the sector, and ultimately increase consumer protection. The General Counsel of Swiftix, Adam Percy, also agreed with much of the Treasury's proposals, saying the primary focus should be ensuring that crypto investors can safely access the benefits of blockchain technology while still allowing room for innovation. However, Jonathan Miller, the managing director of Kraken Australia, told Cointelegraph he was concerned that the new rules would be stuffing the crypto industry into a TradFi-shaped box. Australia is now in the unfortunate situation where our regulation has taken a very long time, so we're taking the approach of shoehorning crypto into existing financial services regulation, said Miller. Still, Miller admitted that the consultation paper was a step in the right direction. Next, Miller said, we're behind our global peers when it comes to implementing a crypto framework, so I appreciate the need to have something in place locally to provide certainty to platforms like ours. Liam Hennessy, a partner at Clyde & Co., an international law firm that has been assisting in the consultation process, said that the newest proposal from the Treasury makes sense from the Australian crypto industry, which is good. Hennessy explained that the new rules will help the nation catch up to jurisdictions such as European Union, who are further along in their efforts to better regulate crypto. And additionally, he said the Australian financial services, also known as the AFS licensing regime, can be quite complicated, meaning that local cryptocurrency exchanges and digital asset providers will need to begin preparing their applications now. It looks like Australia are trying to really full force their crypto regulation, which is good in a way, like I said, but obviously we want DeFi to remain powerful. Europe is obviously doing the same thing as Australia, which obviously Europe was first, the US should be next, and then the rest of the world should follow. Now, that's pretty much it for this article, so let's move on to the next one. We'll keep this one short and sweet, and this next one is amazing because Ferrari, the largest, if not one of the largest sports car manufacturers, now accepts payment in Bitcoin Ethereum, and XRP. So what does this mean? It means we're on bullish move, because if Ferrari are accepting crypto, it means that the rest of the other companies will start to follow. Crypto is going mainstream after top luxury brand Ferrari announced it is now accepting digital currencies for its high-end cars. As reported by Reuters, the new allowance from Ferrari is only open to US customers, but plans to extend to the European Union in the coming months based on the demand of its customers. There has been a relatively profound romance between car brands in the crypto world. Notably, Tesla pioneered this move back in 2021 when it started accepting Bitcoin for its cars. The company shortly backtracked on its path, citing the high carbon footprint of the coin, which does not align with its goals. For Ferrari, the company believes the carbon footprint concern is now alleviated as most protocols are now more energy efficient. Despite the support for crypto, Ferrari's chief marketing and commercial officer Enrico Galliera said the company's goal of attaining carbon neutrality by 2030 remains intact. With crypto now going mainstream overall, Galliera said the firm has to reposition itself in terms to capture its customers with a sizable digital currency portfolio. Some are young investors who have built their fortunes around crypto, he said. Some others are more traditional investors who want to diversify their portfolio. BitPay partnership accepted tokens. The luxury car brand has tapped BitPay as its payment processor to the offering. Users will be able to buy high-end cars whose starting price is pegged at about $211,000 with coins like Bitcoin, Ethereum, XRP, and others supported by the top payment processor. The volatility will be curtailed as BitPay will convert the funds into fiat currencies to protect Ferrari's dealers from price swings. Notably, BitPay is playing a very crucial role in powering a number of new use cases that involve digital currencies that can be used as payment for real-world assets. Now that is absolutely huge, and in the future we'll try and get into that. And Ferrari said for users paying with crypto, there will be no change in price, fees, or surcharges. Absolutely superb. So, a very short article here, guys. If Ferrari are going to start accepting it, then obviously Lamborghini, Rolls-Royce, and all these other cars will start to follow. Luxurious brands will definitely start to accept crypto all over the world, and especially in places where there is a lot of money. Now, we are clearly moving to global crypto adoption, guys. If you think we're not, then I really have nothing to say, because there's so much evidence pushing towards the fact. So all I have to say is, guys, invest and dollar cost average now before it's way too late. Let's move on to the next article. And this is a weird one, because clubs promoting NFTs pose risk to fans, the Member of Parliament's warned in the UK. Now, recently in the past, we went through a protocol called Chiliz and its platform called Socios, which is a protocol that allows fans of sports teams to come on the platform, buy NFTs and perk packages. However, this could be coming to an end. So, sports clubs that issue crypto fan tokens risk damaging their reputations, a group of MPs have warned. But what does these MPs know? I don't think that they're very qualified in crypto, but let's wait and see what they have to say. The rise of NFTs and similar assets in sports and the arts are a concern to the Culture, Media and Sport Committee. The committee has warned clubs against exploiting fans. The new FCA rules around crypto investments means firms must now display a warning. The message tells people not to invest unless you're prepared to lose all the money you invest. The BBC has approached the government for a response. NFTs are a one-of-a-kind assets in the digital world that can be bought and sold, but which have no tangible form of their own. Digital fan tokens can be thought of as certificates of ownership for virtual or physical assets. Owning them can give fans access to certain perks, such as being able to vote in fan polls or getting access to ticket ballots. Some of them can be traded like an NFT, but that means their value can vary widely too. NFTs enjoyed a period of considerable popularity and soaring prices during and after the pandemic, with people and businesses encouraged to create them, but MPs say their fluctuating prices are troubling. Clubs are promoting volatile crypto asset schemes to extract additional money from loyal supporters, often with promises of privileges and perks that fail to materialize. The Conservative MP continued fan token schemes must not be used as a substitute for meaningful engagement with supporters. The committee report added that the unique relationship between clubs and the fans means that fan speculation on sport-based crypto assets carries a real risk of financial harm to fans and reputational harm to clubs. It's also voiced concerns over the rise of crypto assets in the arts, with Dame Caroline saying that the artists are at risk of seeing the fruits of their hard work pinched and promoted without permission. A fake Banksy NFT was sold to a British collector through the artist's website for $244k in August of 2021. NFTs have been popularized as a way to create and sell digital art on blockchains, the digital ledgers underpinning crypto transactions, but do not give the buyer the actual artwork or the copyright attached. So how do fan tokens work in sport? Fan tokens are digital membership collectibles which can be used to access rewards such as voting in polls or ballots for exclusive tickets. Some fan tokens can be be bought and sold on a market, but the value of these have fallen dramatically since their peak a few years ago. A recent announcement of a Socios partnership with Tottenham Hotspurs sparked a backlash from fan groups who said that the fan engagement with that club should not cost money and pointed out the risks of losing money through buying crypto. A Socios spokesperson said fan token holders received more than 24,000 matchday tickets and over 1,000 items of merchandise last season and continue to engage with their club in a unique way. And I agree, I think it's very unique and wicked. Fan tokens offer new and complementary benefits to club traditional fan engagement beyond the boundary of geography and, unlike NFTs, are regulated by the FCA. Marketing requirements for fan tokens and similar crypto assets was brought with the scope of the FCA's broader set of rules for financial promotions on October 8th. Firms promoting them must be clear about the risks of investing and inappropriately encourage people to invest, such as by referring a friend. Easy cash grab. Football finance expert Kieran Maguire told the BBC that large football clubs likely saw crypto assets as an easy cash grab and a chance for more revenue streams after the pandemic. But he said the hype around assets like fan tokens and NFTs has since dwindled along with their value. A wave of optimism was created which underpinned and created speculative. Fan tokens can usually be exchanged with each other as like for like, whereas NFTs carrying unique digital identifiers and intended to be a one-of-a-kind collectibles cannot. Formula One teams have turned to NFTs as a way to engage fans or offer membership perks in recent years. The Mercedes F1 team announced a series of NFTs in April 2022 with then partner FTX several months before the exchange collapsed and its owner Sam Bankman-Fried was arrested. Thank goodness. Most recently, these Williams F1 team partnered with crypto exchange Kraken, held a contest letting NFT owners vote for tokens to be displayed on its cars at the upcoming US Grand Prix, and Oracle Red Bull Racing also offers NFT range through its partnership with exchange and sponsor Bybit, which we have a promotion running at the end and you can take a look yourself. Now, I really don't like the fact that the UK are tightening on crypto so much that they are just hassling every single protocol. However, I don't think this will last long. I think that Socios and Chiliz will do well after this, and I hope they do because UK is huge for sports and football, and a lot of the teams are on the Chiliz platform. Now, moving on to the next article. I'm sure you heard about this, that Apple pulled Metamask from the App Store. What exactly happened? Let's find out. So, popular Ethereum wallet Metamask was briefly removed from Apple's App Store on Saturday before being restored. FYI, we're aware that Metamask isn't currently available for download on the App Store. The team said it in a post on X, formerly Twitter. This is and not related to anything malicious, and our team is working hard to resolve it ASAP. Now, that is the most important thing. As long as it's not malicious and it can't drain your wallet, that is fine. That is the most important thing. Look at Galaxy last week or 2 weeks ago now. They lost $270,000. Not very good. However, they did reimburse everyone, which was great. And MetaMask did promise that there is nothing happening similar to that situation. So we expect MetaMask to be back on the App Store shortly, and we sincerely apologize for any inconvenience this may have caused. And just to let you know, it is back up right now. Now, the MetaMask wallet is an essential tool for accessing various decentralized applications on the Web3 ecosystem, boasting a user base of over 30 million users worldwide. The wallet provider also assured users that there is not security concern and no action required on users' part, adding that it is also not related to the app's functionality. We anticipate the MetaMask will be back on the App Store shortly. This is not the first time MetaMask has faced challenges with app marketplaces controlled by tech giants. In December 2019, Google suspended MetaMask from its Play Store, citing a violation of financial services guidelines due to its policy against crypto mining on mobile devices. Despite MetaMask's appeal, Google upheld the ban. Now, Apple's 30% revenue cut poses a challenge to crypto apps. Apple guidelines also require app developers to share 30% of transaction revenues. This has been a barrier for crypto firms, including those facilitating the purchase of NFTs, as they strive to provide services to iOS users. As reported, Apple has removed the Bitcoin-friendly social media app Damus from the App Store for violating its terms of services. The app has a tipping feature that allows content creators to receive tips in the form of Bitcoin through the Lightning Network. Apple deemed this feature a violation of its guidelines, as it prohibits developers from selling additional in-app content unless the transactions go through Apple, through which the tech giants takes a 30% cut. So they're being greedy. They don't want the company to take 100%. Therefore, Apple got rid of them, and they'll do the same thing to anyone in their way. And this is a reminder why we need decentralized finance, not centralized finance. These big companies are just way too powerful. They can do whatever they want, and that's why decentralization is king. Moving on to the last and final article, the Ethereum token could possibly rise fivefold by the end of 2026. Personally, I think it will go beyond fivefold. However, Ether, the second largest cryptocurrency by market cap, may rise more than fivefold in value value by the end of 2026, according to Global Bank Standard Chartered Stan.L, its latest prediction of rocketing crypto prices. Now that is actually a very good prediction considering that this is a bank. Banks normally give very conservative price predictions. They would say yes, it would go up 10% in the space of 5 years. However, with Ethereum, for example, they're giving it a 5-fold, and a 5-fold would be absolutely amazing, taking it to roughly 7.5 to 8k per token, and that is extremely possible, and I personally think that it will reach beyond 10k by that time. However, let's see what they have to say. Ether may hit 8k over the next 2 years as it becomes more widely used in blockchain-based covenants known as smart contracts, as well as gaming and the tokenization of traditional assets, Stan Chart head of FX research Wes Jeong Kendrick wrote. Ether was trading on Wednesday at about 1575. Assessing the value of cryptocurrencies is fraught with difficulty, as tokens as such as Ether or Bitcoin that are not backed by traditional assets lack the gauges used to price stocks, bonds, or currencies. The price of crypto tokens are generally driven by the sentiment of investors. We see this 8k level as a stepping stone to our long-term structural valuation estimate of 26 to 35k, wrote Kendrick, who also heads the bank's digital assets research. So it's clear that they're obviously heading towards a Bitcoin price for the Ethereum. However, that is a long time down the line, but actually could be sooner than we think. That valuation assumes future use cases and revenue streams that may not have emerged yet, although the real-world use cases of gaming and tokenization should support their development. Kendrick told Reuters that the structural valuation estimate was very long-term, say 2040. Ether has gained some 30% this year, though remains almost 70% below its all-time high of about 4,869, hit in November 2021. Stanchart said in July that the crypto token Bitcoin could reach 50k this year and 120k by the end of 2024, and Bitcoin was last trading at $27,275. Now, personally, I don't think Bitcoin's going to hit 50k at the end of this year. Only 2 months to do so it would mean it would have to do a 2x in roughly under 2 months. And while that is possible, I just don't think it is realistic, as much as I would love that to happen. Now, I personally think Bitcoin will hit 100k at some point, probably at the same time that Ethereum hits around 10 to 15k, but it is all a matter of time. What do you see Bitcoin and Ethereum hitting the price of? Do you think Bitcoin will hit over 100k in the next bull run? Do you think Ethereum will hit over 10k in the next bull run? Let me know in the comment section down below. I would love to hear your story. At the moment, guys, the total crypto market cap is still hovering over $1 trillion, 1.08 to be precise. The volume has gone up 80.89% in the last 24 hours, obviously as it was the weekend and the volume gets very quiet. We are now sitting at $25 billion volume, with Bitcoin dominance at 50.4% and Ethereum at 17.6%, and the overall GWEI at 6, which I would recommend using the Ethereum network if you have any transactions to do right now. Also, the Fear and Greed Index is sitting at 41, which is neutral and means we are heading towards the greed, but still more lenient towards the fear. Now, for me, this is a perfect time to dollar cost average. I'm doing so every day, or almost every day anyway, maybe every other day. I'm choosing around 15 to 20 altcoins to dollar cost averaging on average every single month. Sometimes I'll change them up, sometimes I won't. But guys, don't miss out on these opportunities. The bull market is coming up. We've been in the longest bear market ever, so don't hold back. If you're investing in crypto, now is the time. Obviously, nothing is financial advice, it's purely my own opinion. But guys, I wish you all the best. If you enjoyed this video, please don't forget to hit that like and subscribe button. Leave a comment if you have any questions whatsoever. I'll try and do my best to support you. And also, guys, we have a promotion running on Bybit, the best centralized exchange platform for buying, trading, and earning. Bybit is home to all your favorite cryptocurrencies, and you can claim up to $4,380 just by signing up using the link in the description below. It's simple. If you need help finding the right crypto gems, then follow us on Twitter at altcryptogems and head over to our website to get your hands on detailed project reviews, crypto guides, and more. Thank you very much for watching, and we hope you found this video helpful and informative. Until next time, DGens.